Okay, so the whole crypto ETF scene has been, well, buzzing lately, hasn't it?
Absolutely. Bitcoin ETFs broke the dam. Ethereum's in the mix.
Exactly. But now there's something potentially new on the horizon, something that might, shake things up a bit.
Ah, you must be talking about the Canary capital filing.
That's the one. They've filed for a spot TRON ETF, TRX.
Right. But it's not just a TRON ETF. There's a really interesting component here.
Yeah, the staking rewards. That's the part that really jumped out at me. They want to include staking.
Precisely.
Yeah.
Which is, well, quite different from what we've seen approved so far.
Okay, let's just quickly recap. A spot ETF, basically the fund holds the actual crypto, right? Like real TRON tokens in this case.
Correct. You invest in the ETF, you get exposure to the actual underlying TRX held by a custodian. Not futures or anything like that. Simple enough.
Simple enough. But adding staking,
Yeah.
that's where it gets complex, potentially.
That's the novel part, yeah. Staking, for anyone needing a refresher, is like locking up your crypto to help run the network.
And you get rewarded for doing that, usually with more of the same crypto.
Exactly, you earn a yield.
Yeah.
So Canary wants to pass those TRX rewards earned by the fund's holdings onto the ETF investors.
So theoretically, you could get gains from TRON's price and earn extra TRX on top inside an ETF.
That's the idea.
Yeah.
That's the hook. It could be pretty appealing for investors looking for yield.
Interesting. We're digging into this based on a report from BN Crypto. They flagged this filing.
Yeah, they did a good breakdown. So our mission today basically is to unpack this. Look at the filing itself, why this staking bit is such a big deal, and crucially, the hurdles, the regulatory side.
Right, let's dive in. So the filing itself, it's a Form S1 submitted to the SEC, the Securities and Exchange Commission. That happened on April 18th.
Yep, the standard procedure for registering securities.
And the key point, which we keep coming back to, is that this is apparently the very first proposal for a U.S.-based spot TRON ETF that bundles in those staking rewards.
As far as we know, yes. No one else has formally proposed this specific structure for TRON before.
So the staking, you explained it, but how significant is that reward potential usually for something like TRON?
Well, staking yields vary, based on network conditions and how much is being staked overall. But the principle is passive income. For ETF investors, it means potentially earning something, even if the price of TRX is just trading sideways. It adds another dimension beyond just price appreciation.
Okay, so it's not just about betting on the price going up. You get that potential baseline return from the staking itself.
Potentially, yes. If it all works as proposed and gets approved, of course.
Right, big if. Who are the main companies involved here? We mentioned Canary Capital.
Canary Capital is the sponsor, yeah. They're the ones putting this whole thing together and filing the paperwork.
And they need someone to actually hold the TRON on, right? The custodian?
Correct. The filing name's Big Go Trust Company for that role. They'd be responsible for securely storing the TRX, backing the ETS shares. BitGo's a well-known name in crypto custody.
Okay, makes sense. What about the TRON side? Justin's son, he's always vocal. What's his take?
Oh, he's definitely noticed. And he's pretty enthusiastic, shall we say.
Oh, I bet. What did he say?
He was on X, formerly Twitter, basically urging U.S. investors, especially VCs, to act promptly and start buying TRX.
Really pushing it.
Yeah, he expressed a strong belief in TRON's long-term growth and thinks an approved ETF like this, especially with staking, would really ramp up institutional interest.
Did he actually say VCs should buy it? I think I saw that quote.
He did. The quote was something like, U.S. VCs should start buying TRX and fast. Don't wait until it's too late. TRX is a price that only moves one way up.
Wow. Okay, confidence isn't lacking there.
Never is, really.
Yeah.
But putting the hype aside, let's look at TRON itself. Where does it actually sit in the market?
Good point. Because investor enthusiasm is one thing, fundamentals are another.
Right. So according to BN Crypto's data, TRX is currently the 9th largest crypto by market cap. We're talking around, what, $22.9 billion-ish?
That's pretty significant, top 10.
It is. But maybe even more telling is its role in stablecoins.
Yeah, USDT runs on TRON a lot, doesn't it?
A huge amount. DeFi data actually shows TRON is second only to Ethereum for stablecoin settlements.
Second. Wow. Why is that?
Speed and cost, mainly. Transactions on TRON are generally very fast and, importantly, very cheap compared to Ethereum's mainnet fees sometimes. So for moving stablecoins like Tether's USDT around, it's become, well, a go-to network for many people in exchanges.
So it has real, tangible utility. It's not just speculative. People are actively using it for massive volumes of stablecoin transfers daily.
Exactly. That underlying utility is a strong point in its favor, regardless of the ETF outcome.
Okay, which brings us back to the big hurdle, the SEC approval. What are the actual odds here, realistically?
That is the million-dollar question, or maybe the billion-dollar question. Historically, the SEC has been, let's say, skeptical of staking within investment products.
Yeah, they seem to view it differently than just holding the asset. Why?
Their main concern often revolves around whether the staking rewards make the underlying asset function like an unregistered security. They look at things like the Howey test. Is there an investment of money in a common enterprise with an expectation of profits derived from the efforts of others?
And with staking, the efforts of others would be the network validators running the blockchain.
That's the potential interpretation, yes. That the return isn't just from market forces, but from the operational activity facilitated by staking. And that activity, in the SEC's view, might trigger securities laws.
We saw this play out with the Ethereum ETF applications, didn't we? They had to drop the staking language.
Most did, yes. To get the initial spot Bitcoin ETFs approved, staking wasn't even on the table. And for Ethereum, it became a sticking point that led to its removal from many filings to sort of smooth the path.
So Canary Capital is walking right into that known regulatory sensitivity. The B in Crypto piece called it regulatory uncertainty.
Understatement, perhaps. It's a known point of friction. They are essentially testing the waters here, seeing if the SEC's stance has evolved or if this specific structure might pass muster.
Are there other factors? I mean, beyond just the staking mechanism itself?
Well, yes. There's also the context surrounding TRON and Justin Sun. There have been past controversies and allegations, things the SEC is likely aware of.
Right, like allegations about the network being used for illicit finance, though TRON has denied those.
Exactly. While those are just allegations and have been refuted, regulators tend to be extra cautious when there's any kind of associated controversy, fair or not. It adds another layer for them to scrutinize.
So it's not just the technical is staking a security question, but also a broader assessment of the asset and ecosystem.
It often is, yeah. They look at the whole picture. Investor protection is their mandate, so they consider various risks.
It really feels like a high-stakes gamble for Canary Capital, though.
It's certainly bold, but if, and it's a big if, they do get approval.
What would that mean?
It would be genuinely significant. A historic milestone, as the report put it. It would be the first regulated U.S. product offering direct TRX exposure plus those staking yields.
You could see how that might appeal to different types of investors.
For sure. Retail investors looking for yield, maybe institutions wanting regulated exposure to a top 10 coin with an income component. It could potentially broaden TRON's investor base significantly.
It kind of bridges the gap, maybe, between DeFi yield farming and traditional finance ETFs.
It's a good way to put it. It packages some of that crypto-native yield potential into a familiar, regulated wrapper.
Okay, so wrapping this up then. Canary Capital's move, filing for a spot TRON ETF, crucially, with staking rewards included. First of its kind for TRX in the U.S.
A bold proposal, definitely offering potential dual benefits, price exposure and staking yield.
But, and it's a major but, it faces serious regulatory question marks, especially around the SEC's view on staking and maybe some background factors related to TRON itself.
The regulatory hurdle is high. Based on past precedent, it's far from a sure thing.
It really makes you wonder, though, if this did get approved, or even if regulators start signaling more openness to staking and ETFs generally, what could there unlock? How might that change the game for crypto investment products down the line?
That's the really interesting long-term question. Could we see more yield-bearing crypto ETFs? Would it push other assets to explore this? And specifically for TRON, given its existing use case in stablecoins, what would SEC approval or rejection mean for its broader legitimacy and adoption? Definitely something to keep an eye on.